Welcome to Tax Tuesday in February of 2024. And I have a bunch of questions. I am going to just go ahead and dive in. First of all, let me introduce myself. My name is Heather Ryan, and I'm the owner of Tax Queen. And that is a firm specifically helping digital nomads, RVers with tax prep, tax planning, tax questions, financial stuff, getting their business running. So I'm going to go ahead and jump into the questions that I got. Sorry, again, apologize for being a little late here today. My technology was just not working with me this morning. Something changed. So let's dive in. First question. I'm a full-time RVer with no sticks and bricks home. I travel full-time and volunteer at different locations around the U.S. Okay, almost all the time we volunteer is in exchange for a site only. Is there a time where our mileage and expenses can go in and a volunteer working can be as tax deductible? So no. Short answer, absolutely not. Volunteering, you do not get anything for it. No. Only time you can really do tax deductible and for volunteering is if you're actually physically giving goods. So that's what you can deduct. Mileage, it's a really sticky situation. Also, tax deductible, for any kind of charity is taken on our itemized deductions. And with the standard deduction being so high, I'm rarely seeing people get to itemize. And you'd have to have a ton of charitable contributions. I'm talking thousands, like $20,000 to be able to qualify to take that. So no. If you're work camping, it's actually you're exchanging your time for that free site. So it's a barter. It's actually, if you don't want to hear this, but that is actually income to you getting a free site. So I know that doesn't sound right, but next question. We have a YouTube business, so content creator, recently monetized, and we're wondering if we've been getting the deductions we're eligible for as we travel full time with creating content. The journey is part of our product. Can we take our mileage and travel expenses? Short answer is no. And the reason why is because this is your lifestyle choice and you're not necessarily just driving for work. This is your home. This is your full-time residence. And it's no different than someone like commuting for work and whatever doesn't just get to take 100% of their vehicle and their car. So it's the same concept. And normally I like to explain it of the you are creating like a new tax home every time you move and go to a new place. So if you drove from point A to point B and stopped at that campground, and then while you're at that campground or RV park, you take a day or two to explore, the mileage for those 2 days to explore, or maybe it's a week, every day you go out and explore and you're recording your hiking or whatever, for sure you can take the mileage for that. But going from point A to point B does not allow you. It's a personal lifestyle choice, and it's just a very gray area. And I mean, you're welcome to take any stance you want on your tax return, but I do not recommend taking all of your mileage. Taking 15 or 20,000 miles a year is a huge red flag, especially if you have no permanent residence, an apartment, a sticks and bricks, whatever. It's just, it's not allowed. And I can share with you, I did write a a blog post about travel expenses, and the way that it's looked at is basically you have to be duplicating your expenses in order to take them. And when you're traveling and that's your full-time residence, it's not, you're not duplicating things. So let me get that pulled up for you and I'll share that here. So this is about travel expenses. Sorry for taking a little bit of time there. I just had to grab that link. Okay. So next question, we are newbies and haven't started our RV life. We plan on spending a quarter of our time traveling around. I am semi-retired, but I am a part-time employee, 1099 part-time employee. So first I'm going to stop there, and I'm going to reiterate, a 1099 is a contractor. You're not an employee, you are a contract worker, freelancer, whatever word you want to use, and you own a business. So just be aware of that. You are not an employee. Employees receive W-2 wages, contract workers receive 1099. So I wanted to clarify that. What things can I write off, also known as take as tax deductions, when I'm working in the RV? Nothing. So again, it's the same concept, no different than when we live in a home. You can't take your entire home just because you work from home or you run a business from home. You take a very small percentage based on the 100% use of business. So if you have an office in your home, right? And home, we can also now say RV. So who has an office in their RV, right? Very, very few people. I see this sometimes with toy haulers if the garage space is being used for an office. I also see this with bunkhouses if that second bedroom is being used as an office, but it's such a tiny percentage. There's a couple things that's not really worth much, and home office is a big red flag. So if you're saying, I'm taking $50 from my home office, they're going to be like, what is this person talking about? So remember, it has to be 100% business use. And in a tiny living space, what space is truly 100% dedicated to work? It's very rare to see that. Again, exceptions, toy haulers with garage space, and bunkhouse with that second bedroom. Goes on to share, I have weekly calls and I have to travel to my place of employment. So you're actually not employed. Again, you're a contract worker, and I would still just call this commuting. So commuting does not count as a business expense. It doesn't matter if it's in a different state. It doesn't matter if it's the next town over. Commuting does not count. A little bit different maybe, contract worker, if you're going to meet with a client. Again, drive to a campground nearby, record the mileage from the campground or RV park to that office if you're going into their office to meet with them. So that mileage could count. Same concept as travel expenses. So from point A to point B, when you're moving your home and your home is an RV, doesn't count. That's your personal lifestyle choice. But once you're parked somewhere, parking your home and then driving and commuting into the office for that client, that those miles would count. So the same thing. You're going out to explore because you're a YouTube content creator. The mileage when you're parked at a campground to go out and explore for the day. Let's say you're in Yellowstone and you go out and spend, you can drive 150 miles, some of these times. So same thing, same concept. I hope that helps there. Let's see, next question. We are a married couple who operate as an LLC and will file Form 1065. Do we submit this form with our personal taxes? Okay, so let's step back. LLC, multi-member, right? Even a married couple is a partnership. You got that part get down. That's awesome. And you do file a Form 1065. A 1065 is a completely separate tax return. So it's an informational tax return reporting the income and the expenses of the partnership. It also reports who owns said business and what percentage they own of the partnership. That 1065 produces what we call K1. So a Form K1 is part of the 1065. That K1 is used to report that income on your personal 1040 because we call this a pass-through entity because that partnership is passing through the net profit to its partners. If you're a husband and wife, you're going to report 100%, right? Because it's going to be all on the 1040. If it was just two friends not filing a joint return, you could be 30 and 70, 50-50, 40-60, you name it. It can be any combination. The question here, though, is do you submit it with your personal taxes? So no, because it's a separate tax return. So that 1065, which is your partnership tax return, is due March 15th. Again, deadline to file is March 15th. Your personal return is due April 15th. So they are not submitted together. They are completely separate. So just be aware of that. So I hope that answers that question. 1065 for partnership, completely separate tax return, completely separate filing. produces a K1, which you use similar to would be a W-2 or 1099 to report that income on your 1040. Okay. Next question. I rented out my RV 100% through a management company. I've one question. Do I claim all my income using expenses section 179 or on a Schedule C? So let me clarify. Section 179 is a way to take a 100% deduction for an expense on your business. That's usually for an asset. Anything over $2,500 we qualify as something that you have to depreciate. And Section 179 is allowing you to depreciate it 100%. There's also bonus depreciation. Right now it's at 80%. The government is in talks to make that 100%. We don't know if that will pass or not, but it actually is being talked about right now for this tax season. So just be aware of that. So Section 179 is not a schedule or a form that you're going to report any income or expenses on. It's actually a way to take a depreciation and an expense on your Schedule C business. Or S Corp. They're all available. Partnerships, S Corps, it doesn't matter. So as far as if you're renting out and you're not actively participating because you have a management company, I will report this on a Schedule E. A Schedule C is more for active participation because you're going to pay self-employment taxes on it. So again, it's kind of different tax preparers and professionals will tell you different things. So yeah, just be careful there. Schedule C is really for an active business because you're going to pay self-employment tax, and a Schedule E is for rental property. So in this case, I might actually call this rental property. Next question. I did actually see a question, and I'm going to get to the live questions. I just want to get through all the ones that were submitted prior to today, and then I will get to live questions. So that's fine. Feel free to drop your questions in there. I like it. Question 6 that I got previously is, we love RVing and think about buying a RV lot deeded within an RV resort. When we are not using the resort, rents it out. We are thinking that it would be good to start an LLC and run everything through it for tax purposes. What type of LLC would be best, and what would our business be considered? Okay, so let's define what an LLC is. An LLC is nothing, absolutely nothing to do with taxes. An LLC is a legal entity. Limited liability company is what it stands for, and it doesn't matter if you form that or not. You can report rental income on your tax return. And as a matter of fact, rental income for a husband and wife, even with an LLC, can be reported on a Schedule E. So remember, Schedule E, we were just talking about that in the previous question, right? So rental property is reported on a Schedule E. If it's split use, as in this one, so it sounds like this RV lot would be split. Sometimes you'd be staying there and using it, and sometimes you would rent it out. You get to split the expenses according to the percentage of business versus personal use, right? Because that's what we're calling business, is that rental, and then sometimes you're going to stay on there, so that's your personal use. So if you use it 80% of the time and rent it out 20% of the time, you get to take 20% of the expenses. So that's the taxes, that's HOA dues, anything like that. If you have a mortgage on there, right, because you get a loan to buy the lot, the interest for there, so 20% of the expenses. So I hope that makes sense. The LLC is a legal entity, not a tax one. I get a lot of questions around LLCs and business entities, and I just want to be clear that the LLC is a legal entity, not a taxable one. So, and it doesn't offer any tax benefits, which I think surprises many people. So there we go. So if you want to do a little further reading on that, go ahead. And then mine is a question about tracking expenses. I'm trying to find a good balance between having credit cards with points, keeping records. Previously, I did not split my personal and business credit cards, but plan to this year. I was just planning to use my credit card transaction categories. All right, so I'm going to stop even reading. How do you recommend handling this? Um, First things first, if you have a business, all finances should be separate. Credit card, bank account, you name it, there shouldn't be any commingling money. And this is particularly true, and I'm not a lawyer, if you have an LLC and you're trying to protect assets and separate business from personal, finances are included in that. If you start commingling, that LLC goes out the window and it's completely useless to protect anything. Again, not a lawyer, just giving you my 2 cents. But yes, all have a business card. If you're trying to get points and things like that, find one that has good rewards or point system for a business. Get a business credit card. If you don't have a LLC or anything registered, so the banks are going to say, well, we're not going to give you a business card, then use one credit card for your business transaction. Even though it's a personal card, that's okay, but just keep it set aside and say, okay, this Visa or MasterCard or Amex, whatever, is for business transactions only. I will not put anything personal on it, so no commingling. That's the biggest no or biggest tip I can give you for business finances. It also makes it really easy. So if you want to use an accounting software like QuickBooks or Wave, you just connect the business credit card, the business bank account, and you don't have to worry about categorizing which is which or remembering which was personal and which was business. It just should all be business. Remember, separate bank account, separate credit card. So I hope that answers that and clarifies. I do not recommend commingling at all. So next question, I've only got a couple more, and then I do see a couple questions in there, so I'm happy to answer some questions on there. Is an insurance payment from an auto accident taxable income? That is a great question. And no, it is not, because you're not, well, first of all, your car, your auto, truck, whatever it is probably personal, so it's not income. And it's usually an insurance payment is meant to give you money to buy a new vehicle. So no, it is not taxable income. That was a quick one. I like that. All right, last question, and then I'm going to get to the couple that I saw posted here live. I have an acupuncture business and I just moved to a new state. How do I go about closing the business for tax purposes? Is it required for me to report my income under a business? If it's required to report my business, is it possible to transfer it from one state to another? Or do I have to start a new business? So to close a business, we're going to answer the first question. To close a business, you dissolve it with the state. So if you have an LLC or other kind of legal entity formed with the state, you just go on there and file dissolution paperwork. They'll probably charge you something to do that, and you just dissolve it. You also would notify the IRS to close that EIN, right? Because that's your EIN is your employer identification number, similar to a social security number. So when we die, right? So we tell the Social Security office, hey, this person has deceased. This Social Security number should no longer be used. Same thing if our business is closing, we tell the IRS that EIN should no longer be used. That business has ceased operating. So those are your two actions really to close a business. If you moved from one state to another and want to continue doing that business, there are some states that will let you domesticate a business. That's typically the term they use. So you can move your LLC from one state to another, and you can usually keep your EIN with it. So that EIN is tied to that. It's the same name and everything. It's just changing your address. So I don't see an issue there. If you don't want to keep the LLC, again, dissolve it with the state, close the EIN, and just operate under your legal name to run your business. So you don't have to have a business. There's no requirement that says you have to have a registered business. If you're operating, depending on the state or the town or the city you're in, they may require some kind of registration to run a business, especially for acupuncture, because there's special licensing required there to be an acupuncturist. So just research that. I'm not going to give you specifics on that because I wouldn't know specifically depending on your location. Second part of it, I'm doing part-time acupuncture work and employed full-time. Is it necessary to me to open a new business? No. So I've kind of covered that. You can record business income under your, if you're operating under your legal name, again, I'll use myself as an example. So if I just operate as Heather Ryan, I can run a business that way. That's fine. There's nothing wrong with that. In your case, acupuncture requires licensing. So I would definitely research with the state, research with the town or the city or the county you're in, and just make sure that that is legal. Okay, we're talking legal matters here, not really tax matters, because acupuncturists require licensing. So definitely research that. But you can move your business if you want to keep that LLC. You can move it from your previous state to the new state. But just make sure you're complying with the new state laws and rules, especially as a licensed acupuncturist. All right. Those are the questions that I got ahead of time. And I will go ahead and read a couple of the ones that I got live here. So let's see. I work from home as a contractor and they do not provide a 1099. So that, it doesn't matter. That's on them. So let's explain the 1099. As long as you report all of your income on your return, then you're doing it right. The 1099 that they issue, or they should issue from that company, allows them to take the deduction on their tax return. Without filing a 1099, that company can technically not be able to take you as a contractor's expense on their business. So you're doing it correctly. If you report all of your income, that's fine. You report your expenses. There's nothing wrong with what you're doing. If you have a contractor that you work with, you pay them more than $600 a year, you must file a 1099 NEC in order to deduct that contractor payment on your own tax return, on your business filing. So I hope that clarifies that. You don't need to receive one in order to report your income, but that company needs to issue one. The only exception here is if you're a corporation. So corporations, S or C, do not receive 1099s. So they don't need to do that. But there's a form called a W-9, and that is what the company should be getting from you to know whether you're a C Corp, an S Corp, an LLC, a partnership, whatever, and whether they need to issue a 1099. So that's on them. Definitely report all your income, all your expenses, and you should be good to go. All right. Follow-up question to the 1065. After we file the 1065 form, will the IRS send us the K-1? So no. So the 1065, so I recommend you go here. If I give me a second, I will grab the 1065. 1 minute. Bear with me. Form, and I will share it here. And you can read through it. I do recommend you look at this. I hope that they include a K-1 on here. K-1 is part of the 1065. It is one of the, it's actually not produced here. So I'm just looking at the IRS partnership return. So when you file your 1065, it produces a K-1. Similarly, when you file a 1040 and you have a Schedule C, right? It's just part of that 1040. K-1 is part of a 1065. So it is just when you create the 1065 filing and you put in the partners, the names, you get a K-1 and it's used. So that's what you use. So the IRS doesn't send you anything. It's part of the 1065 filing, and you are submitting that 1065, including the K-1. The K-1 shows the partner name, the partner social security number, or tax ID number, could be an EIN, partner address, partner income, expenses, all those things that they can deduct. It looks a little different. I wish I could maybe get you a K-1, what it looks like. Here, let me see if I can get you a sample K-1. And that is directly from the IRS website. That's what a K-1 looks like. So if you pull that link up, you'll see what I'm talking about. So it's giving you information about the partnership, about the partner, and then business income and any other like losses or deductions or whatever that you can take as part of it. So I hope that clarifies that question. It's not, the K-1 is not something that the IRS is going to send you. You're actually sending them a K-1 to use. So yes, I hope that clarifies that. It is part of it. So yeah, when you fill out a 1065, that K-1 is going to be produced the minute you put in the partner information. So each of you is going to have a K-1. So just like a W-2, 1099. We have 1099 interest, we have 1099 dividends, we have 1099 for non-employee compensation, so those contractor payments, same thing. It's just another tax form that we use. So I hope that clarifies that. And remember that 1065 is deadline is March 15th. That does trip people up. It is due a month before your personal taxes. You can file for an extension, and that would give you till September. So, and the reason for that again is because it produces that information you need to do your personal return. That's why it's due early. So just be aware of that. Any other questions while I'm here live? I'm happy to answer them. This has been great. I appreciate you guys coming and joining me live and asking some live questions. And I had a lot of questions actually sent beforehand. If I have nothing else, if no one has any other questions or anything, comments, the next one is happening March 5th, and we'll see you then, 10 a.m. Mountain Time. Hopefully I won't have any technical issues like I did today, but I still made it. It's just a little late. And anyone have any other last minute questions? Otherwise, I'm going to sign off. It is tax season, so I am busy and working on tax returns and helping my clients. Otherwise, thank you for attending. I really appreciate it. And if you want to submit a question, if you think of something when we get off and you want to submit a question, feel free to do that, and I will answer it the next time live. So here's that link as well. And otherwise, I will see you in March. Have a great February.